Pocket.
Hey everybody, and welcome to our Sunday Market Analysis show for today, Sunday the 4th of the 4th, 2021, the day that daylight saving ends in New Zealand. It's great to have your company today as the team start and have a look at this market. Interesting week behind, a bit of a spike up towards the end of the week on stock markets. Did catch us a little bit by surprise, or me anyway. I was a bit surprised at that move, and I understand from Julian earlier a little bit of a move down in Bitcoin today as well. As markets tend to seem to roll along and then spike in either direction, some quite volatile moves for us to take advantage of. We're going to start today with our market analysis being the macro man, Julian McCree. Julian, what can you tell us about macro markets today?
Yeah, hi Paul, and happy Easter to everybody wherever you are in the world. It's been a wonderful day here in New Zealand and a wonderful Easter weekend, which is quite unusual. As often we get as the turn of the season's a bit dodgy weather, but this time it's been amazing. So yeah, look, Paul, I think from my perspective, this is a week of, as usual, when we have a couple of extra days, a week of thoughtfulness and also trying to do a little background work into the medium term and the long term. So. I was just sharing with this with a few people just a couple of minutes ago, Paul. I think it's okay to put my cycle chart up there, isn't it? Let me just see how I can do that. So please. Oh, I don't think I've got. Yes, I do. I should be okay to do screen sharing. So just hold on a second while we do some of this. Just hold on, everybody. I apologize for this. It's not normally as broken up as this. Hopefully you can see this when it comes up on the screen. If it doesn't, I'll just share again. And here we go. Okay, so this is the medium and short-term cycles of the US stock market. So food for thought more than anything else. Okay, when I talk about cycles, I don't mean to call market tops and market bottoms. That's all very interesting. If it coincides, that's brilliant. What we're really trying to show here is these are turning points. They're turning points, but not the magnitude of the turning points. It's entirely feasible the US stock market goes sideways here. But I think for the next couple of months, we're into a reasonably flat environment, flat to down environment, and therefore trade accordingly. Now, what else is going on? Well, there's some technical aspects to the market right now, which are quite interesting. I think that the asset markets generally are incredibly optimistic, which is not a problem. Most people are quite comfortable with that, and volatility remains at a relatively low level. However, behind the scenes, there's some crazy things going on in terms of market breadth. I think the S&P is rising these days with only something like 5% of stocks hitting new highs and something like 95% of stocks not hitting new highs, which is all a bit crazy and a bit too low. So again, it's all those big caps that are getting involved again, right? So there's some interesting market internals happening. All of this points to the basic message that we need to be careful, we need to be cautious, and maybe there's going to be a consolidation in the stock markets in the US. I don't think that necessarily will feed through to either the European or the Asian markets unless, and here's the unless the dollar falls, right? If the dollar falls and those currencies start to strengthen again, as we've been seeing, maybe it's time for a turn in the euro, maybe it's time for a turn in dollar yen. If those things do start to happen, then obviously those stock markets will struggle as well too, just on a parity basis in terms of where the US market is. So they tend to act together once you take account of the relative currency effects. So yeah, look, my basic thesis right now is to be a little careful on the markets for the next 5 months. The Asian markets, not the Asian markets, I mean the American stock market's looking a little overdone, I think so, and supply is creeping in. That's the core message I've got. Now, the other core message I also have as well too is just to reinforce and to once again reinforce this fundamental message from the Fed. I can't stress this enough, guys. You absolutely have to get this. Go read the last two transcripts of Powell's speeches for the last two Fed meetings, right? He is really clear about this, and often a lot of the market commentators forget what he's been saying. Okay, he will not act until he sees progress on unemployment, and especially progress on diversity in unemployment as well too, right? He will not move rates no matter what happens. Okay, so inflation could be 7%. He still won't go if unemployment hasn't caught up. Okay, it's a really key, important message, right? You've got to get a handle on the fact the Fed's job is not just to control inflation; it's also to manage the level of unemployment. And they still have a huge number of unemployed people in the States, as there are around the world as a result of the pandemic. They've got to get back to work again. If those numbers start to run very quickly, and the trend is very firmly for that downward track, a little bit more aggressive than what we're seeing at the moment. We need to see a substantial pickup in employment, which gets us towards those figures he's talking about. Then the Fed will start thinking about raising interest rates without actually doing it. Okay, but this is a very clear message. Rates aren't going anywhere in the front end of the US curve, which then means at some point that the long end rates, which have been rising quite rapidly recently, will have to stop rising, because you can't have a super steep yield curve. At this stage, the only time you have a super steep yield curve is in times of incredible uncertainty or war. We're not in those situations. So consequently, my belief is that I think that there's probably this move in rates is, whilst not overdone, is probably getting towards the end of the end of its gig, right? Within 20 basis points of the end of the gig, somehow or other, right? And if the rates do keep on rising, then the stock market will inevitably notice that, and we'll see some crazy things happening. So I think that's the key message I've got on a reflective Easter weekend, Paul. Cautious in the US stock market and what that's going to mean for all of the currency pairs around the world, and also don't fight the Fed.
Julian, do you think it's fair to say that the US stock market's now just on watch until we see a sell? There's sort of an inevitable feeling that at some stage we are going to see one, and it's just a matter of it's on watch until we see it.
Yeah, look, every year the market corrects, right? There's always a time during the year we can buy the stock market cheaper than where it was. And maybe this is the time, maybe it just goes sideways, Paul. I think I'm putting it on watch for sure, but I think it's already been done. The ripples of the hedge fund liquidation we saw last week, over the course of the last 2 weeks, I think apart from market practitioners who are close to it, has gone completely unnoticed by everybody. Not if you own Viacom or Palantir shares, you certainly have felt the pain there. But but I do worry that was one of the early warning signs that something odd is going to happen.
Julian, can you give us a quick summary of what actually did happen?
Yeah, so look, there was a hedge fund who was levered about between 5 or 10 times its market capital. They managed to get that leverage by going to a lot of the major banks on the street and asking them to do stock swaps rather than actually own the stocks themselves. Because if you do a stock swap, which is a derivative transaction, you have to put up less margin. And in putting up less margin, that enables them to lever themselves, because they can use the money to do the money they've got to go and do it with somebody else as well too, right? The money that's left to go, and you can lever yourself up to 5 or 10 times, right? So what happened is, as the markets have risen over the course of the last 18 months, he has that hedge fund, and that hedge fund principal, Bill Huang, I think, has more and more significant positions on in a smaller and smaller number of stocks. And when it came time that a couple of the major banks said, I think we need a bit more collateral here, he didn't have it, and therefore that was considered, as the old saying goes, that was a margin call. Nothing ever changes in life, right? A little bit of over leverage. I remember Warren Buffett saying the 3 things that can catch an investor out are liquor, ladies, and leverage. So my wife had a slightly more flowery description of it when I told her that, but it's a true expression, I think, for in this case it certainly applies, right? The guy was doing crazy things and he got found out, and when you try and liquidate those positions, it creates incredible ripples in the market, incredible violence, and more earthquakes rather than ripples, I would say.
So is it fair to say, Julian, that if we had one organisation doing it, we've probably got a bunch of organisations doing it, and the banks right now are going to be a bit worried and tightening up on collateral a little bit on all these positions?
Well, what's the first thing you're going to do when you've been once bitten, right? You're going to go around all the other hedge fund positions that you've got who have been doing similar trades with you and say, well, how much leverage do you guys have on? And by the way, we need to double your collateral. We need that right now, please. And you've got 2 days to comply, right? And so or you reduce your positions.
Right. And so if the banks, how much was the loss on this? Did they lost 50 billion?
I think the banks, they aren't talking about how much money they've lost, but I believe that some of the major money center banks are down a bill or bill and a half. I don't think Morgan Stanley and Goldman Sachs were because they got in first, but there's some other banks out there which have lost a lot of money.
Okay, cheers for that, Julian. Always interesting to get the macro overview of what's happening out there overall. While macro overviews help us a lot to understand what's happening in the market, fundamentals drive direction on individual currencies and individual countries. Alexis is our fundamental queen, and we will hear from her now. Alexis, what is happening this week in fundamentals?
Right. Thanks, guys. Interesting stuff, Julian, as always. Well, I think my focus this week is on the Chinese yuan. Let me just share a screen over here. So what caught my attention was this article that popped out on the Financial Times, and it says that China's currency was set for its worst months since the U.S. trade war. So there is, a bunch of stuff to read about how China might want to push down its currency because they have had really fantastic growth, and they are having a dilemma on whether or not is their growth target over 6%? Was it like weighing down on the currency? So it got me curious about, again, the correlation the renminbi had with the Aussie dollar. So I went to take a look at dollar Aussie, and of course the Aussie dollar as well, to see whether there's any way to prepare for this, whether or not the market will react, and whether or not there will be an opportunity to be taken on individual currencies. So this is a dollar Aussie chart and a dollar renminbi chart. This is on a weekly time frame, and all I was focusing on to look at the highs and the lows, the turnaround points per se. And I think the correlation will be a bit closer if China wasn't, if their monetary policy wasn't as regulated, right? So you can see that the moment China, like all the way, I'm just identifying the turning points of the renminbi. So in let's just start with October, when there was a gradual increase in the dollar yen, which means there was a weakening of the renminbi. The very similar directional, I think directionally very similar for the dollar Aussie as well. And then when the renminbi got slightly stronger over here, the Aussie responded, and then again over here the renminbi weakened. Again, it weakened, and then over the last period, the renminbi had actually strengthened quite a bit, and that also lent its strength of the Aussie. So this was the post-COVID so-called recovery, where the Australian dollar rode on the recovery of the renminbi, right? So where we are right now is pretty interesting, because what I am looking at is the turning point over here on the Chinese renminbi, all right? So coinciding with the article that again came out in the news, that that there might be something brewing over in China. So of course I am looking for opportunities, I think, for a weaker dollar in response to this. So on the flip side, of course, I am looking for Aussie, looking at the Aussie dollar. This is the actual trading pair on your MT4s, and I am looking for the turning points and seeing whether there is any correlation that we can take advantage of. And of course, just part of my blue line is just to make sure my dates were lined up. So you can see the turning points. They are pretty. They have some. There is something there, I think, to explore. And again, there is a significant turning point in the recent weeks of the renminbi, and you can see a very similar turning point of the Australian dollar as well. So I guess I am looking for more weakness in the Aussie next week, and with that, I would like to actually just run through the Aussie pairs to see whether there is any advantages that we can take advantage of. So I'm just going to go on the daily time frame, and I'm going to run through the Aussie pairs. Just as a overview, let me just go to the weekly, just to see where things are at on the weekly time frame. This is Aussie CAD. Okay, might not be as clear on the weekly, but it has come off a significant, I would say, horizontal level. So I guess there's more room to short it. Aussie yen has kind of hit a ceiling over here on the weekly time frame. So there is a probability that Aussie yen might trend upwards to a little bit more, and then probably hit the horizontal level and pop back down. Aussie Kiwi looks a little bit toppish. If we just draw a line across the top over here, I guess you could say it's finding its horizontal level. So it might be a possibility that the Aussie has kind of reached its highs for now, and we could potentially see a turning point because the Aussie will good probability that it might be dragged down by the renminbi, the weakening of the renminbi. So my eyes are on news that's coming out of China, and Aussie Swiss again very similarly. It seems to be reaching at an interesting level as well. Whether or not it will break again, I guess this is the dilemma. So my dilemma over here would be last week I am actually short the Swiss, right? So I will have to relook this again and weigh out whether or not the weight of the renminbi is going to outweigh my weakness of the Swiss, and this is probably my homework for the next week to figure out whether or not the Swiss is weak enough to push the Aussie above the pop, or is the renminbi weak enough to pull the Aussie down? All right. So other than Aussie Swiss, a little bit of dilemma there. I am looking for short Aussies next week with an eye on the news that is coming out from China's currency. And that's all for me, Paul.
Hey, Alexi, fascinating stuff. Let me see if I've got this right. What you're saying is that if the opportunity comes to short the Aussie, you might be able to look at the renminbi for an early sign of when this move might end. So it looks like the renminbi is just leading the Aussie a little bit. So if you jump in, it might follow it down, and you may be able to see the renminbi give you an opportunity to close that trade at some point, or to stay in it if there's a bit more to go.
Yes.
So we may have a better than a connected relationship. We may have a leader and a follower in this as far as the currencies go at this point.
Yep, definitely.
Fascinating stuff, Lexi. Thank you very much. Much appreciated. So if macro gives us an overview of everything and fundamentals tell us what drives the market, the next thing we really need to look for is the data. What's going where? Ash, what do you got for us as far as market data? What are we looking to see this week based on the data you've got?
Well, I think we should start with the dollar because it's going to be, effectively driving just about everything that we are going to be looking at. So let's start with the dollar. And firstly, I think we should probably start with the seasonality with the dollar, because I think this is the most interesting and maybe the most telling, where we do tend to see seasonally weakness in the dollar going into April and right the way through to May. And it does really, it gets a bit choppy in this area, but really, yes, it does start to rally potentially a bit in May, but then we're coming down again and down again and down again. So the dollar really could be starting on a pretty weak period right the way through to September time. Looking at this chart, and we know that the dollar's already in a fairly tenuous position as it is. When we look at the COT data to see whether that backs up that particular thesis, then we have seen the index drop right off, and that has been caused by some fairly heavy selling coming in here. But it's not significant enough. We're not seeing the index right down at the bottom, and that's what we want to see. When it kind of hits these periods here, we did see some downward movement in the dollar at this particular point. Hit some a low point down here, and we saw a few weeks of selling here. And these are weekly bars, but so far we haven't seen that come into play with the dollar, and it's not really suggesting that now is it's probably not the time just yet. Looking at this chart, it looks like 95 on the dollar index looks like a pretty good level to try and take a technical short position. So the technicals kind of suggest that we might get a few more weeks of upside. It might be difficult. It might be clawing up, clawing back, clawing up, clawing back, and then eventually pop up. But certainly when it comes down to the COT data, it's not really backed up with the sellers yet. It's not backed up with a buy, but it's not backed up with the sellers yet. But I think we need to be probably more on our metal for looking for the sell eventually with the dollar. And as I said, that's going to affect everything. If we look at gold, then in actual fact, just to kind of discuss a little bit about Jules's point about employment, the employment data. What's been interesting throughout this whole period is the different ways that countries have handled their employment picture. So where the states effectively gave everybody some money to survive, the United Kingdom had a furlough scheme which basically kept people in jobs. So there's not a really true picture of the job data in the UK because of that. Because when the furlough scheme eventually comes off, then we probably will see some unemployment. And if you look at this chart here, we see from April the unemployment figure is dropping, But if we start to look at a slightly wider view, in actual fact, let me put it onto a 5-year view, we do still see the unemployment rate in America way above its 5-year average here. So we'd be looking for it to get down to around about 4% before we were really interested in saying, okay, well, maybe Powell could be ready to change his stance on those interest rates, because I completely agree with Jules. We have to make sure that we're aware of what his policy stance is, and it is about employment. So keep watching those employment numbers and see if it does start to change and move down to 4, and then we might start to see some upside in the dollar. But until then, I think we can remain a bear, and I think we need to look for that 95 level around that point. So that's the dollar. Now gold is starting to climb, but it's again at no significant level. And I've seen this right across the board, actually, that many of these aren't really significant enough to say this would be a trade that I would really start to like to look for right now. It's really a bit of a kind of, be very, very cautious with these, and probably try and get in and out probably quicker than you normally would. The one that is the most interesting, I think, is the yen. Now, if we start with a seasonal pattern on the yen, look at what happens in April. This is when we tend to start a big move seasonally to the upside in the yen, right the way through to October. And if we bring in the COT data here, the yen is interesting, way above the 50 line, obviously. It's around about 69, so I'd like to see it push up to 80 before I was a bit more comfortable with starting to buy the yen. And I'd also want to look for a catalyst of some sort before buying the yen. Look for some stock market weakness. But we see, look at this uptick in the yen with the buying here. And the sellers, yeah, okay, they've started to curb a little bit, the last couple of weeks, but we're definitely seeing an uptick in the buying with the yen. So the yen is the one that is the standout. So if we're looking for dollar weakness at some point, the COT data is pointing towards a dollar yen short. And that would probably be all we need to cover. I think if we look at some of the others, then they are not significant enough for us to take advantage of. If we looked at the euro, then the euro is obviously in a buy zone. If you look at the chart, which I can show you if you like. Here we go. The euro's in a bit of a buy zone here. There's my euro dollar. Here we go. Euro's in a bit of a buy zone here. Little trend line maybe through this point somewhere. Looks like it could be a buying opportunity. But the eurozone has been so bad at handling the pandemic. There may still be some weakness with the euro, but we are seeing the COT data suggest that the selling pressure is coming off a little bit. So there could be a bit more easing to the upside with the euro, but nothing that would suggest that we found a low here and it's something to hold on to. And that's really what I'm seeing across the board. So yeah, as I say, mate, apart from the yen, the others look like they could be short-term positions, if anything.
Cheers, Ash. Thanks for that. Always interesting to see where the data is pointing us. US dollar weakness remains on board for now as we look at this market. And I think when you're looking at US dollar, you are looking at everything. Everything's valued in US dollars, so it does tell us what might happen across the board in all kinds of products. One of those products, of course, is thank you, Ash. One of those products, of course, is gold. Ainslie, for gold, everything remains on the table. This is a market which has popped back after a decent sell, but really hard to really commit to a direction at this point on it.
It is really hard at the moment. We've had a situation where if we just go to the second chart to the right, which is my daily chart, we've seen a double bounce, a double bottom here, and it was a really long time in the making. So you're talking about over a month to form that double bottom with a huge period of consolidation. Now, I drew this consolidation box here on my 4-hourly chart, which is the one on the left, quite some time ago, actually. And lo and behold, we had a drop at the beginning of the week, straight down to this level, couple of hours there, and then bang, straight back up. And where's it sitting? Right at this level again, 1735. Now, where do we go to from here? Does it come back down and retest the 1700 level? Do we see it push back up and see if it tries to break free from the consolidation box and continue? or does it just stay in the consolidation box forever? So it seems. It's a really tough call, Paul. It's really, we've had, this is not a big move. It's 1 day break, a false breakout, and then bang, straight back up again. And it's 2 days down, 2 days up, 2 days down, 2 days up. And it's like, it's giving me a headache, to be quite honest, because I check the 4-hourly chart and I'm just like, I don't think I've ever been so drained trying to trade a gold chart before, but it's just, the information's there. It's just a matter of being patient, and this is where it is. This is my weekly here. So the third chart to the right, and I was talking to Ash earlier about, I've got a massive bull flag on my weekly, and it's still there. It's still there. It started down here in 2018, 2019. So I really like a break to the upside. If I get that up around 1900, we're off and running to the races. I reckon we're going to see 3000 in a heartbeat. But I think it's going to be a really, really long road until we get there. So at the moment, we are sitting right in the middle of no man's land. We have got 3 options, which is long, short, or sideways. It's not even long, short, or out at the moment. It's just, we've had a really tough time with gold for over the last month. Nothing that's giving us a good firm trend, nothing that's giving us a protracted trend that we can scale into and get going on. And at the moment, I'm half expecting it to do what it did here, because we've now hit this level of 1735 where it came back down and tested the 1700 level. Will it do that? Its behavior is almost identical to what we saw at the beginning of March. Now we are seeing the similar behavior at the beginning of April, and it's not what we were used to seeing in gold. Seasonally, what are we meant to see? The post-election year, we will see a bit of up and down with an uptick towards the end of April, but whether that comes early, whether that just peters along, I don't know. We need more information, because the other thing we've just had here, by the way, is 7 up bars. 1, 2, 3, 4, 5, 6. Yeah, 7 up bars. And generally speaking, the market does not like to post more than 8 before we have a retracement. So we're at an inflection point, and that is telling me to wait and see. So guys, that's where I am at with gold at the moment until I get a bit more information.
Let me see if I can sum it up for you, Ainsley, from what you've told me, for what I've got from this, right, is that the chart's a classic trading chart. History will tell us whoever was right, it was obvious. If it goes up from here, we're going to say, look, double bottom, a couple of big buying bars was always going up. If it goes down from here, we're going to say, hey, putting a lower high was always going to go down. It's gold. If it sits in a range, we're going to say, hell, it ranges all the time. It's hardly unpredictable. No matter what happens from here, people are going to say it was easy. But around 1750, 1760 is our key level, right? We get a break above that.
Yes.
We're starting to get bullish, and we take out those 2 lows, and it's all on the short side, right?
Yeah, so we take out those 2 lows, we're on the short side. If we take out this really important level, which is the 1755 level, and we have a close above that, I think we're good. But at the moment, as you said, you saw it for the majority of 4 weeks, we just went ka-chung, ka-chung, ka-chung. All I have done with that consolidation box is move it along. I haven't moved it up or down, but that's where we're at. So we're looking at some more information, because we've landed right back on that level again. We have to wait. A bit more patience, guys.
Thank you very much, Ainsley. Always interesting to get your view on gold. It does look an interesting time for me. And I do have a feeling that when we're talking 7 days from now, Ainsley, we might have a little more certainty around direction. I do think it's going to pick a direction from here. Really, there's some really nice clear levels when it gets through them in either direction. That's pretty directional for us. Thank you for that. Next up, for the week ahead, we'll be talking to Shukri Hamid about cryptocurrencies. Shukri, rough day for Bitcoin today.
Rough day, but it's all in the pattern, and I think we started April very well, too well. I think we're in a phase where this is no man's land already. It's crazy. So this is Ethereum showing against Bitcoin, and it broke up on April 1st or 31st March, right on the dot.
Yeah.
This is showing that the altcoins, the smaller ones, which you see here, and I'll show you more of this, like that. See, it corrected because it almost touched 2 trillion, the market cap. And of course, we have a normal correction, has corrected. But where is Bitcoin? Because you guys want to know where Bitcoin is. Okay, it's here. Now, that doesn't show a lot until I open this chart, because this is supposed to be like 2017, right? So let's say this is 2017. And let's go back in time. Oh, look what happened then. Look what happened then, okay? Broke up, broke down, broke up, broke down, and then just went on a tear. And I think we are either here or here. And next round, if we break this, it's either gonna go 70 and maybe even go 100. Look at that. Looks seemingly the same, okay?
So there's no doubt for Bitcoin, right? That this 60,000 level is important, and what we're seeing, I think, is a change in the players in it, right? So we spoke to Simon the other day. He sold 16 coins. I think he bought them around $10,000. He sold them at $50,000 or $50,000. And what it said was, well, from 50,000, it's not going to go up 5 times to 250 in a hurry. So I can put it somewhere else. So these guys were looking for multiplication of prices at 50, 60,000.
He won't be happy there, Paul. He won't be happy.
They're going to move out, right, and other stuff, right? And we're still going to have the me's in the world that guys don't know a lot about, the oldies that don't know a lot about the crypto stuff. This is where we belong, and the experts are going to get into the smaller coins, the coin launchers, and the non-fungible NFTs,
tokens,
right?
Yes, and that's why we gave Simon the moniker the Pancake Lord. Now, we've been telling you stories about how 620 became 123K, right? But it took a couple of weeks.
That long.
Yeah. But do you know that on Friday, on April 1st, and which is why April is kind of like a bullish month, he took 1,050 to 168,000 within 27 hours or 24 hours.
I do know that. I have seen that. He did send me a screenshot. Go look at this. And I said to him, I'm closing the business down. I'm just going to do crypto. What are we doing? So that was just over $1,000 to $120,000 and
168.
$168,024. Look, quickly, I want to finish with something with you, but is there any advice for the week ahead? I know you've got your shows, but is there any advice for the week ahead?
Week ahead is this. Polkadot and Kusama are breaking out. I think you should get this because there was significant news last week. The next DeFi is going to come. It's out already, and they've announced it, and it's coming from New Zealand. Oh my God. Kusama and Polkadot is called Akala. It's very significant, because all DeFi is about giving gifts. So there's inflationary, right? Now, this girl, I think because, hey, New Zealand has a lady prime minister. So the women in New Zealand are very powerful. She introduced an innovation that for Akala and this Karura, there's no inflation. The tokens are fixed. Now, when you have DeFi that gives gifts and the tokens are fixed, there's only one destination, it's called Moon. That's what the last I heard about it. The next thing that she's done is liquid staking. Now, remember this, Paul. Say you have 1,000 New Zealand, right? This is how it works.
I've got 1,000 New Zealand, yeah.
Yeah, and then you put it in a bank, right? What happens? And it earns yield. What happens to your dollar? Is it stuck in the bank?
My money's stuck in the bank, and it goes up incredibly slowly.
Yes, and now this is what this girl has done. This lady has done. In this world, if you put 1,000 there, of course you get your interest, right? But you can pull out that 1,000. Let's call it ANZD. And that ANZD can now be traded in the New Zealand stock market or to buy New Zealand bonds. You can't go to Australia, it's a different system. But suddenly your capital is not locked. Your capital is not locked anymore. So in DeFi 1.0, the Americans and the British were the ones that used it. Hey, that's why Simon's from there. But the innovation came from Australia. It seems like DeFi 2.0 is going to come from New Zealand. So you guys don't miss this tomorrow. 7:45 will go about how this is going to change things. Really, your capital now, you can stretch it further without leverage.
Shukri, been a busy weekend for crypto. People would say a crypto show, Bitcoin down $3,000. It's been a disaster, but I want to acknowledge you, mate. Can I say it on the show? Congratulations, mate. That's 1 million US in profit in the last 12 months for you, isn't it?
Yeah, now it's 1.1, yeah.
Fantastic, mate.
10 months,
Congratulations.
10 months, 10 months.
10 months, 1.1 million US. I honestly wonder why I go to work sometimes, mate. Congratulations. That's awesome. We will be following along and joining your advice as we go from this show, from the weekly analysis, market analysis, and the other shows as we go.
New Zealanders, for all New Zealand, I know it's late, but please join me tomorrow night. Very important.
Is that the message for me? I will join you tomorrow night, and I do apologise for missing you on Thursday night. Sure.
And Julian too. This is how you stretch your Kiwi dollars.
Okay, well, I'll drop a message. I don't know if Julian's in or not. Still, he often stays and watches, but I'll drop a message to him. Got to move on, mate. We're going to talk oil with Ainslie, and I think she'll be enjoying the oil direction a lot more than she's enjoying the gold direction. So next for us is oil trading with Ainslie. Ainslie, what's going on with oil?
It's keeping gold. Mystery Gloves Company, and oil is keeping gold company. Let's have a look at this screen, shall we? So, are we seeing an oil screen?
So this happened. Yes, we are. Yep.
Good. Which has gone. Here's the daily. It's gone absolutely nowhere for the last couple of weeks. Look at that 4-hourly chart. If you want to get it, zoom in and see how far you've gone, not very far at all. The upside is that there was a meeting on Thursday, 1st of April. That was Thursday. I think that's right. OPEC Plus had a meeting, and they have actually agreed to gradually increase their restriction quotas, and that's really important because that information was really well received in the market, and they said they were going to increase their production in relation to demand because of all the vaccinations that are apparently taking place. And we'll just ignore the fact that AstraZeneca has been handbraked in Europe, and the rollout's been stopped in a couple of countries because of blood clots and all that kind of jazz. However, the rest of us are just going to gloss right over that and keep going, and they can see some light at the end of the tunnel. So what we're looking at here, you can see it a little more clearly on the weekly. The last 2 weeks, you got 2 doji bars. It's very, very unfortunate, but that's what we've got at the moment. We've got just a lot of sideways movement. We're flipping between, on a technical response, we're between the 50 EMA and the 20 EMA. And hopefully we'll get some traction, because we have had a good period of consolidation, that we will get we'll get a breakout to the upside with a bit more manufacturing coming online. And as soon as that manufacturing comes online again, we're going to start seeing the demand for oil increase. And it's just a sign of the times at the moment that we haven't got much to go on. But the fact that we did not have a big drop to the downside with OPEC and OPEC plus countries saying that they're going to increase their production. They're doing 350,000 barrels per day in May and June, and 450,000 by July. So it's a very gradual increase, as opposed to when they threw caution to the wind and started throwing 1 million barrels a day at production when there was a fight last April. It's coming up a year. Can you believe that's a year? Oh my goodness, that was a year when they had that big fight and COVID really started to kick in. That was a year ago. Oh, coming up a year ago. We're just a couple of weeks off that. We've had this really good move up from the January breakout. We know that the first quarter was always going to see a nice, good seasonal push with the demand on oil, regardless of the COVID breakout. But we've just come back. We're looking for it. It's come back and sat down here, retested this little 57.30 mark, and it hasn't really gone from there. We are consolidating. I'm looking for a break to the high side at the moment. Goodness only knows what will make it twitch, because anything seems to make oil twitch at the moment, to go have a little hissy fit, which it seems to recover from really, really quickly, by the way. It's bad news, it's good news, it's bad news, it's good news, and it just flicks around and is really, really hugging those fundamental news releases. So hang on, hold tight. There really isn't anything strong to go with on oil at the moment, but I'm looking, I would say, in the next couple of weeks, I would like to see us move back up towards this level, if not $70 by the end of the month.
Cheers, Ainsley. I'm certainly going to be holding my oil longs based on the seasonal long we got into. I'm certainly Bill overall like the move we've seen up until the last few days. It has been a bit more sideways last week, a bit more sideways. Thank you very much for that. Next up, we've got the currency index, man. So everybody talks about the dollar index and the importance of it, but really what people don't do is break down the other currencies into their indexes. Lloyd's up to talk about currency index strength. Lloyd, what have you got for us?
Hi, Paul. So let me grab the screens. Okay. So let's have a review of last week according to what the currency indices gave us. Oops. What did I do? So last week, according to currency indices, we actually had two trades set up for us. One is actually on euro pound. So this actually sets up beautifully. You can see that price breaks. It actually broke last week, and the retest was beautiful. So still in this trade. The second trade that I didn't manage to get in, but it's still set up, is actually dollar Swiss. It did test the level that it's supposed to test, but I didn't trade any of the price actions here. Wasn't really that definitive for me. But still, price actually took off, which was nice to know. Now, this week, what we do have is actually, again, I'm still pretty bullish about the dollar index. You can see that previously I had a horizontal level markup at 92.2. Price broke and it still remains above it. Yeah. So I still think that price actually goes up to 95. Shouldn't have much of an issue with that. When we look at the daily chart, it really forms a very nice cyclicity. Price goes higher high, higher low, and now it's still going up. So we might expect some dollar cyclicity this week, as in price might just go lower, probably bounce off. That's what it does. And then it will just continue its merry way. Yeah. So next up, bottom of my list is actually the Canadian index. Now, Canadian index, when you have a look at it, is that price is actually very near a strong horizontal level, which is $80. Yeah. So, but looking at from all the way to April, last year April to now, we can safely conclude that this is the Canadian index is on a very, very nice uptrend. Yeah. So at this moment, even though it's near a horizontal level, I know, according to the price action on the daily chart, there's still no reason to believe that price might actually turn around. Yeah, just be very careful. I wouldn't suggest trading straight into 80. If price breaks and a retest, then that might be a signal for us to actually go long. Yeah, but it's still worth looking out for. A British pound is a bit hazy on the manner. Price is still on an uptrend, got rejected by 140, and that has been on a consolidation since. Yeah. So on the daily chart, price actually did test 140, got whacked down, had a false breakout, and then it went back straight into the consolidation zone again. Now on Monday, this is crucial to me. If price remains within the box, then we might have a play for price to actually go back up to 140 again. Yeah. So might have a pretty near take profit level, but it's still worth a play. Overall, it's still looking strong for British pound. I think it needs some momentum to break through 140. Now, Kiwi price is near $70. It has broken out of its consolidation since last week. So now it's at a strong horizontal level. When we look at the daily charts, we can see that price actually broke it already. Now it's coming back for a retest. Now, coming Monday, any indication that price is rejecting 70, then I'll actually go on Kiwi short already. Yeah, so this is worth keeping, definitely worth keeping a lookout for. Aussie, if you look on the weekly chart, price is still ranging, so I don't have much interest in it. Now, Euro price has already weakened already. So officially, I can say that this is actually on a downtrend. When we look at the daily chart, you can see that price broke the horizontal level, might have a fair bit of retracement till midweek. Then from there, I'll be placing a short position for Euro. This will be a pretty standard play. Yen and Swiss being both of them are the safe haven currency, I think they're still going to weaken. I don't see anything in the way, just that for Yen, it's fast coming to this $90 level. Yeah. So anybody who has a short Yen position, suggest you keep a lookout for. And Swiss, now Swiss, I think is the weaker of both pairs. If you are into the safe haven currency play, then I would actually be shorting Swiss more than the Yen. Yeah. So Swiss, it has a huge way to go. Yeah, from here 106 to $100. Now with that, for this upcoming week, the two currency that I'm looking to trade will be dollar yen. Let's have a look at the H4 chart. You can see that I have a very nice, to me, this is a bearish, bullish flag. Yeah, just waiting for price to actually break out. And once it breaks out a retest of this area, the upper zone, then I'll be happy to go in for a long position. And the next pair that I'm keeping a lookout for is actually cat Swiss. Now this will be the stronger pair in play. Yeah, so you can see that price actually broke. Now some may see this as an inverted head and shoulder. It doesn't matter what I see. All I see is a level, price broke, waiting for a retest, and then I'll be going for a long position. Yeah, so these are the two currencies that I'll be looking to trade for the upcoming week. That's all.
Cheers, Lloyd. Thanks for that, and great to see you on camera, mate. Thanks for getting the camera organised and being on screen, mate. Cheers. Thank you very much for that. Rightio, we wind up our weekly market analysis as we always do with the technician's 2 cents worth. Geoff, is it a technical market right now?
Oh, look, always is, Paul. At some stage on some currency pairs. So let's have a look and see what I can find this week. First up, I'm going to point out just one thing, really, that I would like to, I guess, make you understand why I do what I do on a Sunday. And it's generally the case I'm looking for reversals or continuations, in most cases reversals. And on this chart, I think it's very, very clear what I'm actually looking for, and I'll kind of take that into my analysis today. I look for, and one of the things I was taught when I was a young no, I was never a young trader, back in the, I guess, the zeros, I was taught that there was such a thing as a market direction or a key reversal bar. And I think it works very, very well in this chart. And what a key reversal bar is, or a market direction bar is something that has got a lower low in this case. If we're going in an upward direction, it's got a lower low than the previous bar, and it closes on or near its high, as this one has done. Now, I just want to point out a few of those and what they result in. That one there is exactly that. And if you're coming the opposite direction, it's got a higher high than the previous, and it closes on or near its low. So just let's investigate that and see what we can see. So that resulted in a rally that went up to here, resulted in a sell-off that went down to here. The very next one, lower low, closed on or near its high, up to here. Higher high, closed on or near its low, down to here. Lower low, closed on or near its high, up to here, etc., etc., etc. Even this big bar here fits that criteria. This bar here fits that criteria. So does this bar here, fits that criteria. So does that bar here, and so on and so forth. So does that bar here. Well, we've got one of those this week on the weekly chart, where we've got a high that's higher than the previous, and it's closed on or near its low. Now, if you can refute all of that evidence that I've just supplied to you on this chart, good luck to you. But that kind of gives me an indication that this is going south in some shape or form. Now, I'm in a long here and have been for many weeks on this particular chart, but I'm compelled to now, well, I'll probably cover that long in some fashion by looking at this chart on the weekly and going, well, okay, let's take advantage of the knowledge that we have and start to look at a short here. So how we're going to do that is probably debatable at this point. We've got a beautiful little tweezer top sitting there on the top of my ascending channel. We've got a big bearish bar on Friday. Really all I'm looking for is a lower high here, and I'll look to trade this short. So that's pound Kiwi. I'm going to carry that that prognosis through to Aussie Kiwi as well, but it's a little bit different because I've got a structure here that's telling me that we're going long at some stage. So it's interesting to go back to the weekly chart and see that potential key reversal here, where we've got higher high, higher than the previous bar, and it's closed on or near its low. This is not compelling for me because this one here is still in play. We've got a low that's lower than the previous, and it's closed on or near its high. Is this one finished? And then we've got another one here. You see, these are all repetitive. They all do the same thing. And that was the last one that we saw, I think, before this one. I'm inclined to think that this will go short then long based on these two here. So I'm not particularly keen to trade this short for a longer period of time. And we do have a clear double bottom here, higher high, higher low. We're searching for a higher high here. So I'm probably looking to trade that short on a short-term basis. But I really want to see what happens next. You can see the monthly pivot, the new monthly pivot here has just been pierced and closed below that monthly pivot. What I'd really like to see is something on a smaller time frame. Give me a retest of that monthly pivot. I'm not sure. The weekly will drop without question. So will the daily. So we've probably got pivots down here somewhere. Probably like to see that break and retest. Play it short down to here, which would still give us a higher low, higher high sequence. And then we can look to trade it long from this area here. And bear in mind that we are in a sequence of trading to the top of that range, which is up here somewhere. So it's probably a case of short to go long on Aussie Kiwi. And I think we've been looking for that for quite some time, actually. There's three other charts I want to look at, and dollar Swissy is one of them. I'm looking at the monthly chart here, and the reason I'm looking at that is just to make a point. And the point is this. We've had 3 months in a row of bullish bars preceding the current month that we are in. And you have to go back. Where can you see 3 bullish months in a row? There's one there. So we've had one of those, 2 of those, since the incredible decoupling of the euro and the Swissy on January 2015. So that's not a common occurrence, is what I'm trying to point out. And we are at a resistance level here as well. So I'm expecting the monthly chart to continue its downward trajectory. Where to? Probably this area here, where we've got a clear lower low, or a clear low here and a clear high here, and we've had a bounce off that as well. So I'm expecting a retracement here of some kind. And if you have a look at this chart as well, you can see 1, 2, 3, 4, 5, 6, 7 bullish candles in a row on a weekly chart. You'd have to go back quite a fair way to find where that's happened in previous history as well. So I'm expecting that we're going to have a pullback here on dollar Swissy, and I'm not sure why fundamentally that's even possible, frankly, at the moment, but that's where we are. So I'm looking to come back to maybe 93 or 92.88 as I've got that level there. So that will be a bearish bias on dollar Swissy this week. And I think the best of the range trades this week will be Aussie Swiss, number 1. And if you go back and have a look at this on a 4-hour chart, you can see that range pretty clearly. The thing that I do like, all week last week, it rejected this weekly pivot level apart from one little spike down, but it soon came back very, very quickly into that range. So it's a tiny little range, and I think we've got a strong chance of trading that back to the top before we go anywhere else. Not really interested on a longer term directional bias, but again, you can see it's been very, very bullish. You're probably expecting that to stay there for a little while to get over that bullish momentum, and that's where we are. So I'm more than happy to trade that long back to the top of the range, and then keep it inside that range, keep the bias inside that range for some time to come until we get that breakout. That was a nice little hint that we don't want to go lower at the moment. Monthly pivot's not going to change. The weekly pivot will probably move a little bit, but it's not going to go too far. I think that's an excellent launching pad for a long, but you only want to trade it up to that 72 level, 0.72 level, Aussie Swissy. And the last of the range trades, well, the 2 of the range trades that I think are the better ones this week, dollar CAD's another one. That's the monthly chart that we're looking at, and I've got an extreme, and I said this last week, an extreme bias to the downside on this. But on this chart, I can also see a very clear support level that we are now rejecting for not the first time, not the second time, not the third time, but the 4th time. So I'm expecting this to go back towards the top of the range. May not reach the top. That's the monthly chart again, so we've got to take that into consideration. There's the weekly chart significantly coming off the bottom there. I'm looking for a higher low. to trade that in the long direction. May come on the daily chart, may come on a shorter time frame as well. On the daily chart, this trend line is extremely important, and we have broken back below that weekly pivot, which is interesting. I was looking all week, and we did trade this long to the top of that range earlier in the week and got a beautiful exit. Actually, it was a lovely trade. Now we've come back below the weekly pivot. I'm expecting this level here, 125.07, to be the launch pad for the next long, and that will give us a pretty cool looking inverted head and shoulders there. So I'm really looking for that level. Not sure what happened on Friday to give this the boost that it got, but gee, I'd love to see this down here around about the 125.07 level. I don't trade limit entry orders, but I'm extremely tempted to do that, just to place a limit entry order here, get a fairly decent stop loss underneath it, and see how that pans out. I think we're going back to that trade line, or trend line, or trade line, call it what you want, at some stage. And there's the launch pad round about that 125 mark. I think that would be an excellent place to go long dollar CAD. And that is what I'll be looking for during the week. And that is my 2 cents worth.
And cheers, Geoff. Thank you very much for your 2 cents worth. I always look forward to the last part of the week for us. The last thing we do in a trading week on a Sunday night is listen to you and the technical analysis of the trades. Always some interesting insights around charts and chart patterns. Thank you very much for that. And
cheers, mate.
Cheers, mate. If I can, happy Easter to the team. Thank you very much, all of you, for coming in and sharing today. I do know it's a family day, so appreciate the fact you found a few minutes each for us to come along and to share your stuff today. If you're watching this, hope you get fantastic value out of it. And have a good week trading, guys. Remember, stay calm and make good decisions. And if you do that, it'll all work out for you. Thanks, everyone. Thanks, Geoff. Have a great week, guys. See you later.